Time is officially up for the market, and we have to start looking bearish the market as the yield curve inversion has finally occurred, ladies and gentlemen. We only have a couple months to prepare before the inevitable history repeating itself, but not necessarily in the exact ways as history has repeated itself. Good morning or evening, depending on when you're watching this. Hope you're having a wonderful start to your week or had a wonderful weekend. Today, we're going to be talking about what the yield curve inversion means for the market, what Buffett sees in the market, and what his secret strategy is, along with the key levels that you could have predicted what happened this week in the market. It was very, very simple to see what was about to happen to the market, what the elevated VIX means, what happened to Bitcoin, and so much more. We're going to be giving you all that and more, but let's dive into how we can prepare for the upcoming moves in the market. And to do that, you first have to understand what the yield curve is. So we've been showing this on the channel for quite some time. And essentially what it is, it's basically the 10 and 2 year differentiated from one another. Well, what does that mean for me, right? A yield curve, okay. It's basically banks borrow on the short term and lend on the long term. So if you borrow from me, let's say at 5%, but then I loan it to someone, you loan it to someone at 2%, well, you're losing 3%. You can't make financial sense out of that. That is what the yield curve is when the whole financial system gets turned upside down. And we saw what happened in 2008 when this thing went crazy, right? Just to zoom out for everyone to give you a little bit of historical context, this was 2008, where we basically got a steady inversion. That inversion actually dipped back down, reinverted again as 2006 was rolling around. That's when the CMBS collateralized debt obligations really started to bubble up as a pain point, right? A dip in the market if you guys watch The Big Short. And then subsequently going into May, June, July of 2007, we saw the big downturn start, right? So we actually didn't see it until August, where the yield curve was already uninverting at a steepening rate. That's when the Federal Reserve was doing small cuts to save the market, to save the labor market. Doesn't that sound familiar to what is occurring right now? Now, for historical context, what does this mean exactly and how does it play out? Well, I want to show you a video that we shared on our Twitter, which you guys can find linked in the description below, and I will link this post exactly so you can go watch it in full detail. The author does a fantastic job of explaining the yield curve. I don't want to necessarily go too far into it, but if we see in October of 1929, a very, very somber day that occurred, that is roughly when the yield curve uninverted. That led to the fastest steepening of the yield curve as we saw, and now subsequently we're in the same boat, right? And also we can compare the VIX, right? If we look at the last time the yield curve basically uninverts, the VIX continues at a higher level, and that's what we need to mainly pay attention to this week. And that will be the number one indicator going in for us, right? So if we look at, we jump over to the VIX real quick, we can see that it has been steepening steadily throughout the subsequent days. We had the big spike going back when the recessionary fears, and we blew past 30 and 40 and 60 like it was nothing. Hot knife through butter. This is going to give you an indication of, is this thing going to actually continue in the upper movement? We talk about VIX extensively on this channel, and we also provide you weekly updates of where this thing is, what the market's doing, the key levels, and you could have seen this entire thing in the market, right? What do we mean by that? Well, I said in the last week in deep dive that I will link down the description below for posterity for you all. I said, if we start breaking 473.37, we need to stop playing bullish and we need to basically be looking at bearish positions as we went. And then subsequently just crap the bed. There was no mercy that day. There was no mercy whatsoever on this somber Tuesday, right? Monday was looking and we were jabbing around. I said in the update video for that week that subsequently I don't like this price action. However, I could see this still running up. We haven't necessarily broken the levels. We retraced. I don't like how we're touching the 50 so much, right? Just bouncing around that 50, and subsequently we broke. Then we just slammed down, broke 467, did not look back, and we basically went plummeting, right? Now, where did we close? That's going to be the big discussion piece for today. But if you guys want to stay updated on the market, if you wouldn't mind, hit the subscribe button and have the bell notifications on. That way you know when videos and update videos come up about this, right? We're going to share with you different facts. Make sure you guys follow us on X so that way you can see when we're streaming live, when videos come out, another notification piece, or join the Discord where you can interact with us live. That will be also linked in the description below. We usually do a Sunday open stream, so it's going to be a lot of fun this week because, well, I don't know how markets are going to do. We may get a dead cat bounce, and I'm going to be looking at that. However, we're going to be discussing the CPI as well in this video, and boy, oh boy, it's going to be a spicy week, right? We do have potential for a massive bull rally if that CPI comes in good, but then the question is jobs going to be the underlying factor that the Federal Reserve now pivots to, for lack of a better term, and then subsequently, are they too late? That's all the questions we're going to be trying to answer today. So let's dive in. So to understand what happened to the market, we have to look at the main leading sector, right? NASDAQ is not the main leading sector. The chips are. Chips are the leading sector in the market, and they have been going bearish, bearish, and bearish, and we are heading towards their low back in August, right? So this is the concern thing. SOXX, guys, make sure you add this to your watch list. This will tell you if we're going to be bullish or bearish. This is a summarization of all the chips, NVIDIA, Intel, AMD, AVGO, all of them, Qualcomm, all wrapped into one so you can visualize the sector as a whole. It's mainly weighted at AVGO and NVIDIA just because of how large they are, right? Their weighting is going to take a pretty big chunk of this. However, as we can see, we closed towards the low and we didn't look back. Mirror image of what happened with the NASDAQ, right? NASDAQ, chips lead together, and then the SPY went afterwards. So let's dive into the SPY, and actually let me clean up these levels for you guys so we can talk about what actually happened and where we have to look, because this one's going to be a little more complicated than last week. So as you can see here, we got the level set up, and the first question is going to be, which way is potential going? In my opinion, there is a huge potential for a dead cat bounce to look to short the market. For one simple reason, you are below the 50-day moving average, and the NASDAQ is also subsequently heading straight for that 200. We'll get into NASDAQ in just a second, right? So talking about the S&P, right? The 50-day moving average is going to be the contentions point for bullishness or bearishness. We have to be careful on CPI day. If we're trending down in this region right here, CPI comes out, we could have a gap and go basically, where we saw this many times in 2022, 2023. The CPI report actually generated a large gap and go 2% rally in the S&P. That is not impossible, especially with the VIX being at elevated levels. There is a lot of volatility in these markets right now. However, again, I cannot stress enough that we have to be considerably above 549.04. That number is going to change a little bit as we move along that 50-day moving average. So let's just call it 485.50, 549, right? Tongue twister there. But essentially, that's going to be an area where we're going to be looking at for rotationary points. Then we look at upwards targets and downwards targets. Now, this is my warning to all the bears out there. You actually are doing something smart, and we'll get into that when we get into the calendar for the week. You actually were trimming positions, and I'll explain what that means in just a moment. But if we're breaking below 539.44, which is the low of the week, then we have to look at way more potential to the downside, right? And we need to see coinciding and confluence between all the indexes. We need to see the NASDAQ breaking down, we need to see the Russell breaking down, and we need to see the S&P breaking down together, right? That would mean that this low down here of August is now going to be in play. That means the 200-day moving average is going to be in play, and that puts us at approximately another 4% move, which would land you smack dab at correction territory, if I believe I'm saying that right. Yep. Borderline correction territory, because you're going to be right at that 10%. The NASDAQ would have already been in correction territory, but again, that is very concerning considering the strength in the markets that we've had, and now going into this recessionary question that is not really a question, guys, right? We can talk about this on the yield curve, right? Where we talk about the yield curve on inversion. This has always spelled doom for the market, and we've shown in the historical video. Again, I highly recommend you guys go watch that video that we got reposted on our Twitter. So again, or X. But looking at that, right? If we go to that 539 number, then basically we have to be looking continuously bearish. There's no hope. There's no, maybe selling the rebounds, right? Shorting those rebounds, not really looking bullish play. We have to say bearish mentality. Now, hypothetically, let's say we rotate above 549.04 and we're starting to push up. I really want to be cautious for that possible reversal, right? We've seen where the S&P can break above the 50 and then come right back down for that dead cat style bounce. But if we're staying above 549.04 and we're staying above that 50, holding pretty strong, we get above the 9, then we start leveraging into more bullish plays because that's a massive rally that just occurred, and that means rebound possible. Until we get that right, we're in that kangaroo between 555.08 and 549.04, which is the 9-day and 50-day moving averages. We're coinciding between the two. Also, 555.02 is that rotationary point that we previously found a lot of support on and is now going to be resistance. So we have to look. Okay, we're above 548.97. We're above 505.02. Okay, that is when we go full bullish. That means when the fear is completely out, the fear and greed index, right, is going to not be in fearful territory. It's going to be in greedy territory. That is when we're necessarily going to be putting bullish plays on, right? That's where we have to see the confluence between all the markets. And how do we know that confluence is going to be there? Well, we can jump to the NASDAQ, right? The NASDAQ is going to give us the story as well. And again, I want to talk about just briefly where the NASDAQ ended before we clean up these levels for you guys. This is the previous all-time high that we had that we broke above and was not really a rotationary point during the August push down. We are in striking distance of the 200-day moving average. So if we hit the low of the week, we don't have a lot of room to make error on the NASDAQ. If the NASDAQ breaks down below the 200, well, I don't want to remind you what happened last time this occurred. Well, yeah, that was a pretty gnarly 30% haircut, which would put you from that point, right? That was not even 30% haircut all the way. 30% haircut would put you down into 300 territory on the NASDAQ. That would be catastrophic losses. That would be full on bear market, right? So again, I want to be conscious. A 200-day is going to be a crucial support when we're going into the NASDAQ. So let's just clean up the chart and then we can talk about where the NASDAQ is going to be going. So we can see the NASDAQ's pretty much the cleanest story out of all of them, right? S&P was a little more complicated. NASDAQ, you can't make this simpler. You're breaking below 449 and you're breaking below 448. It's bearish territory. Look for 200 bounce. Once we get to the 200, what we going to do? I'm not going to sit here and pretend I can tell you what's going to happen at 200. We could have a breakdown, push back up, push higher, hard bounce off of it, completely crashing it, right? The options are limitless. And for me to tell you what's going to happen at the 200, I don't know. Simply put it, I don't know. And we have to see how it plays, right? We're going to be looking at that interaction, looking to see if we get back above these levels, right? Because if you're looking to play bullish, that bounce back up, that's when you feel more confident because you have a clear denotation of where you need to put your stop loss, which is basically once it broke back above 448.69 or even the pivot point of 448.19, right? Pretty simple, minimize loss. Like that's approximately 0.2% loss for nearly 2-3% upside on the NASDAQ. Now, as we push higher, 460 is going to be an interesting point just because this is an area we consolidated. Does that become resistance? We're going to have to see how we interact. Again, CPI could push us in a very interesting direction there. Getting above that 9-day, which is going to come down a little bit to that 464, 465 level, and then rotating above 467. That'll be, again, that S&P level that I mentioned previously where we kind of consolidate around. That's going to be the version for the NASDAQ, and then the real test is going to be the 50-day moving average. So the NASDAQ has a lot of bullish potential, and I think this is where we could get trapped if you're looking bullish. Remember, when you get back above holding 2 days consecutively the 50-day moving average, that's when we got to start thinking bullish completely on the NASDAQ. From breaking above, let's say the 460 number, that's where we're cautionary bulls. We're not necessarily looking to short the market there. However, we're looking for evidence that, hey, our theory may be wrong and subsequently pushing higher. Now, above 473.33, okay, Bob's your uncle and you go bullish, right? There's no sense in staying bearish at that point or being really cautionary to the bearish side unless we break down below the 50-day moving average again. So looking at this, right, we have a lot of room to the upside and very limited downside potential until we break the 200. If you break the 200 and you close below the 200 for 2 consecutive days, yeah, I will definitely be giving you an update video then, and we will be talking about how to massively profit from that trade because that's just going to be slap shorts all the way. There's going to be no mercy for the markets there, and especially if that's after CPI, right? How is that all going to play in? And again, I said you got to look for confluence, and that's going to be looking at the Russell. The Russell is now, again, back in the kangaroo, and I'm not really going to be talking much about a Russell because it's a very, very volatile. Small caps are basically left, right, center. and we're below the 50. What do we do at the 200? That's all you have to look for the Russell. All you're looking for the Russell is, are you above the 50, below the 50, above the 200, below the 200? That's just a bullish, bearish sentiment in the markets. But if we look at international markets, before we go to the news, right, Nikkei, which is the Japanese, looking to reverse all its gains it had from that big dollar yen trade. Again, that trade is not over. It's only 50% way unraveled. There is still more carnage to come. China not looking too hot either. They're below the 50-day moving average. However, they've been consolidating. They're a bit stronger than we are. However, usually they could lag behind us. We're going to have to keep an eye on this. We're going to see how futures open. Again, that stream today is 6 p.m. Eastern when that happens. And last but not least, Bitcoin looking like it's coming down to 50,000. Now, is 50,000 going to hold? I don't know, and we're going to have to find out. 50,000 could be an interesting bounce point on Bitcoin, or if we get it back above these moving averages. Again, Bitcoin has done the trappity trap thing where it's breaking down below 50, breaking above. It's just a volatile consolidatory point, and I'm not really interested in playing volatile assets like that just because I have better things to do than look at a chart, lose my nerves, and then have the threat of this thing going all the way to 48. I personally think Bitcoin's not going to hold 50 because it's too thin of a price action. We've been down here as there's no sentiment to be bullish, especially when recessionary fears. No one's going to be wanting to hold the riskiest on asset, especially if I tell you, hold Bitcoin or hold NVIDIA. I think you're going to choose NVIDIA over you're going to choose Bitcoin because it's just more tangible to you, right? It's a stock. You can look at its earnings. Bitcoin, even though I love cryptocurrency, is not necessarily going to be the thing that propels us higher, right? We have to keep an eye on that. And then the RSP, again, broader market selling off. This is just going to give you an indication of is the broader market selling off or is the top 7 or just the bottom half, right? That's what we're going to have to be looking at along with everything else. So let's dive into two things now. The economic calendar and something about Berkshire Hathaway and what Buffett is doing, because I did tell you in the beginning of the video that Buffett is doing something very, very interesting, and I don't think a lot of you are going to catch what that is. So first of all, we're going to recap what happened to last week. Payrolls come in horrible, right? This was a horrible massacre. I'm tooting my own horn for the manufacturing payrolls. I said that was going to come in negative, check mark there. The revision lower for previous non-farm payrolls and then a miss on payrolls. But everyone's like, it's not that bad. I don't think it missed by 20,000, but the other number missed by almost that as well. So total 40,000 revision roughly. Private just getting nuked. As we covered this about a year ago, we said we have to start seeing payrolls go down in the 150s, the hundreds in order to see the carnage start. Here we are. We're down into this area. I don't believe this unemployment number ticking down while payrolls are going down, right? The two don't make sense. Average hourly earnings, inflationary pressures still existing there from wages, right? People still demanding higher labor. No one's going to go work or transfer a job for cheaper, right? Especially in this economy where you're going to have to give up a 3% mortgage rate, which mortgage rates aren't going down and the buyers are not coming out of the woodwork. So that's going to be an interesting one for the markets. Also, the S&P 500, actually net short positions covered, right? So they took some profit off the table. That's very good. However, they're still net short. So we have to be cautious for those dead cat bounces to rip their face off. However, I would love to see the NASDAQ break the 200, S&P break down, and them add more to this because I would give greater confidence that things are going in an interesting direction, especially with the NASDAQ, right, being net long significantly. That can really, really push the market makers to try stealing from the bulls. They've really beat up the bears for the past 2 years, and now I think it's the bulls' turn for that. So Monday, as we can see, we have Atlanta Fed GDP now. That's not really going to be a big number. The inflation expectations could move the market, but I don't really see anything happening. They have Apple event on Monday, but really it's going to be the calm before the storm. Tuesday, we got OPEC monthly report again. That's going to be cuts, but the main event, Tuesday is the debate, but the real market event is going to be CPI. Now, for all those that weren't there in the last live stream, we talked about the CPI expectations. 2.6 is possible. Be cautious of what core comes in at because it's 3.2. So how are market participants going to take that? Because does that mean that we're greenlit for Fed rate cuts of 25 basis points or 50 basis points? Do they kind of turn themselves into a tizzy by saying, okay, we're going to get 50 now instead of 25, and then be disappointed the subsequent week when Jerome Powell only gives them 25. I do think that inflation is going to come down because of oil, right? Oil has been just shredding everyone and their mother because, as you can see, the yellow lines are what the previous price action was a year ago for oil, and we did not transact anywhere. So as we saw oil coming down, we went back and dissected this. 0.3 is not out of the ordinary. It could be 2.7, right? So let's see how they set up the revision, right? How are they setting up your expectations of the revision? Make sure you guys note this down. Bank of America believes that we're saying 3.2 for core, so core not really moving, but obviously oil is going to drag down headline CPI, and that's what the market's going to run on. So again, even though you may believe inflation's not coming down, this is what the market runs on, and we have to pay attention to the reaction, not necessarily the number, and be careful for those rug pulls because they've been doing that at 10, 11 o'clock every single day for the past 3 days, where they run it up into the open and then slam it back down after 11 o'clock. So be cautious of that. PPI really not going to be any big notable event on a Thursday, right? Because we've got 30-year bond auction as well, and really comes down after that. We do have a couple earnings here and there that's left over from the earnings season, but the big one's going to be that Wednesday number for CPI. That's going to green light, red light the Fed's next move and the market's expectation of that. But now, talking about the God Emperor, Berkshire Hathaway, Warren Buffett. He is selling Bank of America shares. Again, this is nothing new, but I want you to read this. I'm going to read this verbatim, and then I want you guys to see why this is important. Berkshire Hathaway continues to be Bank of America's biggest stakeholder with a stake of about 11.1%, according to LSEG data. Per regulatory requirements, Berkshire Hathaway has to keep reporting sales regularly until its holding falls below 10%. Now, if you're intending to sell a large proportion of Bank of America without having to tell everyone you did it, well, here's what you do. You go from 12 to 11, and then 11 to 10. Once you get below 10, you don't have to say anything until your next quarterly earnings. What did he do with Apple? Oh yeah, that's right, the exact same dang thing. So when they just took a huge chunk of Apple, the reason it's 10% is because they're banks, right? The banks have certain rules and bank shares have certain rules. So once it gets below 10%, he can sell 5%, 8%, 9% of Bank of America and not have to report it until their next quarter, right? Earnings like they did with Apple. So again, keep an eye on for articles that talk about Warren Buffett selling and getting below that 10% holding. We will keep you guys updated about that because, yeah, I want to see if this theory comes out. I did call the Apple sell far before he was actually did it and it was announced because logically 2 + 2 = 4. So we're going to see if this plays out the same. And now Fatal's going to give you the biggest winners and losers for the week, and then I'll be back to sign us off.
I gotta be completely honest, everybody. I personally think that this time is honestly different. And what I mean is, basically, we have seen a massive bull run this whole entire time, and the occasional times that we do get a pretty good downturn, it rebounds twice as hard, right? It rebounds upwards twice as hard, making new all-time highs. But seeing that everything is currently going to hell in a handbasket, with job numbers coming out, being revised a lot lower to double digits, going from 114 down to 89,000. You have inflation this upcoming week on September 11th, which we don't know what's going to happen with that one. And then that will essentially solidify the Fed's decision on the rates for the FOMC on the 18th. And on top of that, the yield curve finally uninverting back to being normal. It feels like it's different this time. But then again, I don't know. We all know what happens when we say it's different this time, right? So the same could happen on the other side as well, but we shall see. Only time will tell. You guys can see the S&P 500 fell 4.04 this week. Absolutely massive. It's a great buying opportunity. I took advantage of that. I bought a lot of stocks for me, for my wife, and for my son. So hopefully everybody's doing the same. And on the one day, it fell 1.73%. This was just as of Friday. For some reason, it's not loading, but yeah, it fell 1.73 as of Friday. Now, looking to the next upcoming earnings season, guys, is essentially done, right? We're just now waiting till the next quarter comes. But for this week, we do have a couple notable ones. Like you see Oracle on Monday. And that really is it, honestly. I don't really see of anything else here. On Tuesday, we got GameStop, which, that's in That's itself is a meme, right? On Wednesday, we don't really have much of anything. Actually, Vera Bradley, which my wife would really like. She loves that company. On Thursday, we got mainly Big Lots and Adobe. Adobe's going to be a very, very big one, seeing that that company does a lot of good revenue. Like, that company's fundamentals are absolutely incredible. And on Friday, there's nothing. There's nothing going on that day. So that's essentially the earnings for this week. And now looking into the heat map, we can see that this is blood red. There's a couple companies and a couple sectors, well, actually only one sector, that was very much in the green. But aside from that, everything was massively in the red. And by the looks of it, it seems to be led by none other than the energy as well as the technology sector. And well, looking at the technology sector, guys, the worst performer here was none other than the company SMCI, losing 13.89%. This thing is sub $400. Just a few weeks ago, this thing was upwards of like $1,000, $1,200. Guys, this is what I mean that you can 100% overpay for stuff. A lot of people would have been like, there's no way that this thing will fall than the sub 400. And there you guys have it. Now, we also have other companies like Nvidia losing 12.55%, AVGO losing 12.7%, and the companies like Monolithic Power Systems losing 13.36%. But all in all, that it was the worst one, SMCI. And the best performer in the whole entire sector is the company, this one all the way down here, EPAM Systems, gaining 1.78%. Now, looking into the communications, a lot of red here. I love it because it's like deep red and then just one massively green one. Worst performer here, it is none other than the company, seems to be, guys, the company Google, losing 6.9%. They currently have a lawsuit happening, I believe, this week. So that's going to be fun as well. That's going to be a massive catalyst too. I think it's going to be on Tuesday when that's happening. That's essentially wanting to split them up, right? Essentially wanting to split them up. So this is going down, right? This is going down for that reason. But the best performer, it is the company AT&T, gaining 6.12%, now almost $21 on the dot, guys, $20.97. Looking now into the consumer cyclicals, we can see here that there is green, but there's also a whole lot of red. Worst performer is none other than the company. It seems to be, guys, the company, let's see if I could actually find it. Yeah, it seems to be the company Deckers Outdoors, losing, you guys can barely see that, 8.65%. Actually, can't really move it any further. Yeah, it is 8.65% right there. $859.96. And the best performer seems to be the company, this one right there, Ball Corp, gaining 3.08%. Looking now into the consumer defensives, a whole lot of green here. This is by far the greenest sector that we have seen. Worst performer, it is the company Dollar Tree, losing 21.57%. Wow, $66.50. And the best performer, it is the company Mondelez. I don't really know how to say that, but I'm gonna go with that. Yeah, it definitely seems to be that one, guys. Gaining 6.47%. Looking now into the financials, we can see here that there's a lot of red here. Which is definitely something to worry about, seeing that banks are, they're banks, right? They are banks. So, worst performer here, it is none other than the company IVZ Investco Ltd, losing almost 7% at 6.92%. But also, guys, we got companies like Discover Financials losing 6.5% as well. And the best performer seems to be this company right down here. If I could get it, there we go. Market Access Holdings gaining 4.4%. But also companies like Travelers Companies gaining 3.6%. Looking into the healthcare, a lot of red here as well. I mean, I sound like a broken clock, right? So we got worst performer being none other than the company. Seems to be, guys, the company CNC. Centene, losing 9.53%. Yeah, definitely that one, guys. 9.53%. And the best performer, actually really easy to find, is the company Insulet Corporation, Pod, gaining 4.68%. Into now the industrial sector, this is all red. Wow, I don't even think there's barely any positives here. This is absolutely crazy. Worst performer in the whole entire sector seems to be none other than the company Generac. Now, you guys know what I always say about this company. All-time highs a few years ago, fell sub $100, and right now it's currently at $139.61. There you guys have it. Another example as to how companies can actually fall and not recover back for a really long time. And the best performer it is none other than the company United Airlines, surprising enough, gaining 7.9%. Now looking at the real estate sector, the second most green sector that we've seen so far, worst performer here, it is the company Host Hotels, losing 5.21%, and the best performer seems to be the company American Tower, gaining 5.66%. Also, I gotta mention Realty Income. Remember when this thing was sub $50? $62.40. Hopefully everybody bought when it was sub $50. Looking now into the utility sector, worst performer, it is none other than the company, let's actually see here. Hang on a minute. Yeah, it seems to be the company Vistra Corporation, losing 12.96%. And the best performer, it is the company, I was going to say Duke, but it's actually not Duke. It's the company GE Vernova, gaining 3.64%. And now looking into the energy sector, this has become now a Ruby once again. Only two companies here are in the positive. Worst performer, it seems to be the company, I think I just found it. I don't need to go any further. Seems to be the company APA, losing, you guys can't see that, I am so sorry, but seems to be the company APA losing 13.97%, guys, $25.24. And the best performer, it is, well, there's only two ones here that gained. It is the company's Targa Resources, only gaining 0.31%, and the best performer being Onik, I don't really know how to say it, gaining 1.01%. And lastly, looking at the basic materials, once again, only two of them gained here. Worst performer seems to be none other than the company it's either, it's that one. I thought it was going to be Mosaic at 10.59, but no, it's actually the company Albemarle, losing 16.09%. And the best performer, guys, only two gain here. Sherwin-Williams, essentially flat, 0.06%. And IFF, International Flavors and Fragrances, once again flat, only gaining 0.08%. So as y'all can see, it has been a week and a half when it comes to the markets, and it's not getting any better this upcoming week with CPI on the 11th. Oh boy, on the 11th, because of course it is. Now, I do have news when it comes to that. Guys, I will be taking off Wednesday from work, basically. So I'm going to be live streaming CPI when it comes out, 8:30 Eastern Standard Time. So if you guys are okay with that, stop by, and I will be live streaming the CPI live. Also, we will be live streaming today at around 6 p.m. during Futures Open. We'll have it open so everybody on the Discord can come and chat with us as well. I'll probably go for like about an hour and a half. So yeah, no debate for today. I am busy, but hopefully you guys enjoy the rest of the video and the live stream today as well. So with that said, take it away, Mike.
So guys, thank you all so much for watching. Again, this week is going to be a fantastic week. Make sure you guys come to the 6 p.m. Eastern Standard Time stream tonight. We're going to be doing open, talking about your questions, taking your ticker recommendations, just talking about futures, maybe throwing a future straight on. Again, keep an eye on this thing right over here, which is the yield curve. We'll keep you updated of what's happening with it. I would expect to see further on inversion as the bond market adjusts for the future that is happening. And again, CPI is going to be a hot topic issue. Make sure you guys are prepared. Make sure you keep an eye on the expectations because they tend to play with those a little bit. Let's see if my theory about Warren Buffett turns out to be correct. Throw it in the comment section below if what you guys think is going to happen with that. Do you think I'm right? Do you think I'm wrong? Do you have another theory? I would love to hear your thoughts. Where do you think the fear and greed index is going to land this week? And what surprises do you think are going to happen this week? Throw it down in the comment section below. I really want to hear your thoughts. And thank you all so much for watching, and I'll see you in the next one.